off with the geography-wise growth. It's been largely flattish. I mean, Europe has grown 1% Q on Q. US is down 0.6%. Rest of the world minus 1.5. Quarter on quarter in constant currency terms. So, is this related to the seasonality factor, the Trump factor, or a combination of all of these? And a similar trend is also witnessed in BFSI and other key verticals. And we had Praveen mention that manufacturing, and within manufacturing, high tech is an area of concern. So if you could just articulate your views on that. Thank you.
Maybe we can go
Maybe you
vertical.
can cover with the US piece.
Yeah, so quickly in Americas, this is a seasonally weak quarter for the entire industry. If I specifically look at trends in America, consumer spending is up. We saw first data come out with data around holiday spending, which was up 4.7%. Manufacturing overall momentum is up. The Institute of Supply Management said that manufacturing activity is up 2% year on year. So the fundamentals of the economy are very good. But it's a holiday quarter. There are holiday shutdowns. There are furloughs in many industries. High tech, for example, what Praveen mentioned, did have massive furloughs. There is some fundamental disruption going on to business models as well. As software companies are becoming more on-premise, SaaS companies from on-premise companies, their margin structure is going down, which means we who service them as suppliers have to figure out a low-cost model. The two pillars around automation and innovation is affecting every industry, right, from BFSI to retail to services to energy. So I don't see any major cause for concern. This is a seasonal quarter as such. Almost all industries in all geographies are flat. And I expect the fundamentals of the economy to be strong, Q4 to be, moving forward as well, nothing disturbing to see. And we should see the pipeline return both in terms of large deals, licenses, new, renew, etc. So that's what I see on Americas. Europe.
I think I'll let Rajesh cover Europe, but I'll just talk a little bit about the financial services piece. And as both Vishal and Praveen mentioned, right, we're actually very happy with the performance we had in BFSI this quarter. Despite the very strong headwind that we had from the known ramp down in Williams and Glenn, we were able to defend our revenue very successfully. If you look at the Williams and Glenn impact, it was about 1% of the company level, and that magnified to over 3% of the BFSI level. And despite that, we were able to defend the revenue number. And I think that's largely because on the back of a lot of wins, right, and a lot of organic growth. So working along with Sandeep's teams, we had 3 Mana-led wins in BFSI. We've started work on data as a service for one of our European banking clients. We're working with one of our global clients on their Latin America tech transformation. So on the back of large deal wins, organic growth, and win in the new, we're extremely happy with the performance that we have in BFSI, and we're very optimistic about the the opportunities that we have in Q4. As Vishal mentioned, the key theme that we're seeing across industries, right, is clearly AI. Right, AI is the #1 trend that we're seeing. It really lies at the intersection of a huge number of technology trends, right? So if you look at it, if you look at natural language processing, if you look at data science, if you look at IoT, if you look at blockchain, AI really lies at the convergence of these technologies. And it is going to be extremely important to the future of financial services. And it is something where I believe that we have a leadership position. So if you take our strengths and if you take where the market is headed, if you take our historical performance, I feel that there are reasons to be optimistic about our performance in Q4 and beyond.
From a Europe perspective, I think this was a good quarter. This is, as Sandeep pointed out, seasonally soft quarter. Of course, we saw massive currency movements. Ranga was talking about that earlier, massive depreciation of both the pound and the euro. But in constant currency terms, Europe has done quite well. We expanded about 1%. But more importantly, I think even though we have seen a fair amount of political turmoil in Europe in general, we had the big Brexit issue which was a few months ago. We've got elections coming up in 2 very large economies this year. But we are very optimistic because the pipeline which we have currently in Europe is one of the strongest we've ever seen. and especially financial services has done exceedingly well in Europe as well, and we are also seeing good traction in telecom and certain other industries, even manufacturing. So overall, we're quite very optimistic about the European performance.
Just a follow-up question on that. Could you quantify the demand pipeline for Europe? And as far as India is concerned, is the sluggishness that we are seeing anyway related to the entire demonetization episode? Thank you.
So, I don't think that the India revenue performance has anything to do with demonetization. Obviously there is a project pipeline that they're working on, and based on how we recognize revenue in a particular quarter, there are ups and downs. I don't think it has anything to do with demonetization. As far as the Europe pipeline is concerned, I'll let Rajesh and Sandeep add to it. But we really typically don't break out pipeline, quantify pipeline across various geographies or industries. The overall trend is important because the overall performance is very good. You spoke about the ROW performance as well. And again, because so much of this gets impacted by currencies, right? If you look at ROW minus India performance on a year-on-year basis, that business grew by close to 14.5%. So it's very strong performance on a year-on-year basis.
Yeah, and I don't see any deviation in pipeline between Europe and Americas. Right now, our pipeline across verticals, across geographies is very strong, and across service lines, whether it's large deals, new deals, AI-led deals that Mohit was talking about, new digital experiences, analytics, and so on. So I see the pipeline being very robust across geographies, across verticals, and across service lines.
Okay. Hi, gentlemen. Rahul Dayama from ET Now. Mohit, firstly coming to you, your CEO seemed very optimistic about the BFSI vertical. Would you echo the similar sentiment? And also, give us a sense of the impact of the RBS account really.
Sure. So, Vishal often jokes with me that I'm always cautiously optimistic. And he expressed a great deal of confidence in the future that we see from a Q4 perspective and beyond. And I echo that. I think Q3 was a test of resilience for us as a company and for a financial services unit. The fact that we've been able to sustain revenue performance despite a 1% impact at the company level because of RBS, and obviously that impact is magnified at an FS level, speaks to the resilience. And given the fact that that we are very strong in the areas where our clients are focused, which is AI, which is automation, which is infrastructure transformation using cloud technologies, it's open APIs, and given the fact that the overall spend environment, especially from a US perspective, does look better for the next 12 months. Given these two factors together, I echo his optimism.
Okay. Questions to three of you now. Sandeep, we've spoken a lot about the impact of visa implications. It's sort of a wait and watch policy. But give us a sense of on the ground as far as your conversations with clients are concerned, previous to the election and post the election. Are you seeing some sort of, what's it like post and pre? And also give us as far as the pipeline for manufacturing and retail is concerned, how is that panning out? And I'll just, Ravi, firstly, congratulations on the elevation. Give us a sense of how will this pan out, in terms of responsibilities between Praveen and Dew. And also we understand now you would be based out of India. And lastly, as far as Europe is concerned, are we behind as far as the worst of Brexit implications from the client conversations that you're having? You spoke about how the pipeline really is very robust for the coming quarters. So are the fears of Brexit over, so to say? Thank you.
So in terms of client conversations pre and post-Trump election, I don't think there has been any significant concern across clients. There's obviously two sentiments there. One is, how will the policies be vis-a-vis IT services? But the other sentiment is also in terms of his business friendliness, his innovation friendliness, etc. And so both of them basically balance each other out. We, on the other hand, regardless of that process, have been investing heavily in local hiring. We're investing heavily in automation, more collaboration and new delivery models aggressively. That process is important for us. We're watching legislation very, very closely, as we always have. These things take time, but we are prepared with our plans regardless of this happening. I think the larger trend here is that through the process, pre and post-Trump election, clients were accelerating their focus on automation and AI anyways. and we're going away and are gradually continuing to go away from a people only model to a people plus software model. On that paradigm, as Mohit has earlier said, we seem to be the best placed given our capabilities, given our investments, given our priorities. I think that will be the overarching winning factor here in the future.
Yeah, so thank you for the question. So as you know, a couple of years ago, we created a global delivery organization, which was very central to the strategy of the company. So that remains a part of my responsibility. I continue to shoulder that responsibility. There would be a few enabling functions which will be attached to it, and those are strategic ones which have dependencies of the core delivery function. So it's always a pleasure to take more responsibilities and be a part of this wonderful cooperation and support Praveen most importantly. We do quite a bit in India. So it's extremely important that we kind of distribute our leadership bandwidth. We have client visits, we have a whole bunch of operating metrics which we continue to optimize and keep our ship very sleek so that we could invest back into the business. You've seen our profitability numbers, you've seen our operating metrics. In fact, our utilization this quarter in the last 10 years, if you could just compare Q3, it's been one of the highest. So that's a journey. Our journey is to continue to keep sharpening our operating metrics, continue to support the sales functions, improve our service line competitiveness so that we kind of build that to the future. Sandeep spoke about automation. That's a huge lever in our journey. So all of these, I would think, would be the part of the responsibility I was otherwise working on, and we just bolted on with more enabling functions to support this process.
Rajesh?
I think it's too early to call and say whether the fears of Brexit are the thing of the past. I think we had some very interesting distraction which came from the other side of the pond, and that's why the noise on Brexit has reduced. But I think the journey ahead is long. It is not an easy process. There are a lot of things which have to fall in place. I think clearly organizations and companies who are going to be impacted by this have started creating plans. The good news is we have a long way forward, and there is enough time to plan those things, and we as a company also are taking our own measures. We also have two very important elections coming up in Europe this year, and so again there will be more distractions. So I think the reality is that the path is not very clear, and the separation, if and when it happens, is also not very clear. So I think right now I think we've not really seen. Of course, we've had the impact which Mohit has seen because of RBS, but beyond that, the impact has not been significant.
Ravi, Adit again from CNBC TV 18. We've seen a marginal dip in the overall headcount from over the last 3 months. I think the headcount number has come down by about 66. Again, is this a seasonal thing, or is this the impact of machine learning and automation, everything coming together?
Yeah. So a small part of it is seasonal, but what you would notice is the number of headcount we've added. Just looking at Q3 year on year, we have improved significantly. What I really mean is we have kind of added lesser headcount than similar quarters of the past. Clearly, there is more release of people from production projects because of automation, so that they could be used for more meaningful work. Our journey of moving from a people to a software plus people endeavor, I think, is kicking in, and our clients are actually really leveraging that opportunity. As Mohit earlier spoke about, we are a leader in this space. I think we want to cannibalize our own services as much as we can so that we could add value to the client ecosystem, and therefore the money is actually diverted to more meaningful purposes. So clearly that is a trend. We are seeing more releases of people. We are seeing more productivity baked into large deals. We are seeing automation, the span of automation, which was just focused on application maintenance, is now expanding into application development, L3 kind of work, more judgmental tasks in the life cycle of large projects. So this is going to be a reality. It's going to be mainstream. It's going to be table stakes to be in this business. If we are not accepting and acknowledging that, we are going to get obsolete, as an industry. So we are very, very keen to adapt it, cannibalize ourselves, be bold, tell our clients that this is very important for them, very important for us, and bite it. But what happens is capital gets reinvested into newer purposes, and that's our entire value proposition. We want to renew existing landscapes, divert that capital to newer purposes where you could invest into digital, invest into cloud, invest into newer areas.
But are the redeployments happening at the same pace as
they
the
are,
releases?
and that's the utilization is a great indication. In spite of the fact that we have released, we released 26 to 2,700 people this quarter, just based on automation and applying automation to our services. But our utilization is just you take Q3 and compare it with Q3 year on year, it's been on an all-time high. And it's a big leap from the previous quarters in terms of previous Q3, similar quarter of the previous years. And that's a great indication of not just operational efficiencies, but also the fact that we are applying automation far well and actually redeploying people for higher value added jobs, if I may.
Hi, good morning, gentlemen. Happy New Year to you. This is Sajid here from Bloomberg Quint. Just want to get an idea of how's the retail space doing, because that was a struggling space in the last 2 quarters, and a lot of automation was going into that sector as well. And if you can give us an idea of how the BFSI space is doing with respect to some of your products, and as automation kicks in, what kind of leverages you are able to get from in terms of margins.
Yeah, so I'll take retail first. So retail CPG, let's look at the macro first. We've had a great holiday spending season in the US. Reports are that it grew 4.7% year on year. If you double click on that, about 22% of that spending went through e-commerce, which is an unprecedented high. So e-commerce has grown 12% year on year. Then if you double click further on that, bricks and mortar retailers have grown by about 1.6% year on year. Department stores are getting obsolete in terms of store closings in a massive way. So there's more store shutdowns now per month than ever before, both across Americas and Europe. However, electronics retailers or general merchandise retailers are doing generally better than others. Now, how does that translate to us? It's become very clear to us, and if you can see our press release today, you have a couple of retailers choosing us for our AI-led, automation-led support and maintenance work, because they're trying to cut costs dramatically and drive automation dramatically. Then there are CPG companies who have chosen our Scava platform aggressively for a direct-to-consumer strategy. They are removing the retailer in their path to the consumer and directly developing a relationship to the consumer, which means that perhaps retail and CPG, I'm using the broader industry term, is the first to go through a massive disruption, a digital disruption. So despite the headline of growth, that disruption is key. How is Infosys done in that? If you look at Q1, we grew this vertical at about 5.5% and gathered more incremental revenue from the market than perhaps any other competitor in the space. Q2 was an okay quarter for us, but then Q3 now is a flat quarter, and this is perhaps one of the better Q3s we've had in this vertical, which is normally a negative Q3 due to holiday shutdowns, furloughs, etc. in retail CPG. So if you take the last 9 months put together and compare incremental market share captured, I think we've done a phenomenal job. Year-on-year growth rates for us in this vertical has been above company average. So we've seen a dramatic shift in spend here, and the spend is going towards Scava, which is our digital retail CPG platform, related digital services in the digital practice that Ravi runs. Second, towards AI and Mana. So they're solving core machine learning based business process problems and transforming their processes. Third, towards robotic process automation, we have a world-class product called Assist Edge that a number of retail and CPG companies are adopting. So I feel very comfortable with the way we are investing in digital technologies, in new technologies, in automation, in AI, as we go towards Q4 and for that matter FY18, confident that regardless of where the macro indicators go, we are positioned well as a leader to capture market share in this industry.
Are you seeing the industry going to to an omni-channel route, which I think which we're seeing gradually happening in India as well at some point with some of the retailers? Are you seeing the same thing happening there as well, or the industry has gone over that route already there?
Well, it's a dramatic change, as you rightly pointed out, and it's happening across the world. Primarily the Amazonification of this industry, but it's clear that the basket sizes are much higher if, as a consumer, you go through the online website, the mobile app, and the in-store experience of a retailer. So Amazon, in fact, is launching the physical stores now, as you can see, that because they're also trying to become a differentiated omni-channel retailer. So yes, the answer is yes, this is happening, and we feel that we're very well positioned, because if you see Scava, one of our leading products, it has had as many in-store deployments of kiosks as it has had in mobile applications or in e-commerce. That shows that we have not just are investing in an online platform, we are investing in an omni-channel platform. That's why our adoption is very high. Scava now has great adoption, not just in retail CPG, the same trend we are seeing in banking and financial services and utilities with Rajesh and Mohit. So we are seeing this omni-channel trend that will play out across all industries.
Yeah. And what about the fact that retail stores are now becoming warehouses rather than retail online, because people are using digital to book and pick it up from there rather than so there's a clubbing of store on the ground which we are seeing. Is that also bringing in opportunities for you as well?
You've clearly done your reading on the industry. So you're right. Some of our programs, Ravi has a practice called the Enterprise Applications Services practice that particularly focuses on converting a regular retailer into an omni-channel retailer, using the store as a fulfillment point, using some amazing technologies. We have not just Scava, but he has a great practice in Sterling, in other order management technologies. We have productized those technologies very well and offer them as a service. Our ultimate goal is, as this industry transforms on omni-channel, on stores as a warehouse, on redundant stores, etc., that along with our software and Ravi's large kind of delivery practices, differentiated delivery practices, we build the ultimate business process experience for our customers so that they can eventually build an amazing consumer experience for their customers. And that is very powerful when you bring people and software together. So once again, we feel very comfortable with the positioning we've taken in the market, the leadership position that we've taken in the market in this industry.
And on the BFSI side, Mohit?
So I think, look, on the BFSI side, this has been an area of historical strength for us. And over time, we have worked to build it, right? So I'll just talk about three things. The first is the work that we're doing to build deep sub-vertical capabilities, right? And this is something where, Ravi and I, we speak, multiple times a day, right? About how do we make sure that we can sharpen our proposition? How can we make sure that we build domain expertise? Because at the end of the day, the domain expertise then translates into a number of areas, right? It translates into capabilities in products and solutions made by other companies, and it translates into capabilities in products and solutions and platforms that we're building ourselves, right? So the first piece of work that we're doing is to make sure that we work very closely with the global delivery organization and the BP organization that Ravi runs to build those capabilities. The second piece is around the trends, right? And again, as has been fairly clear in this discussion and several other discussions, that all of our clients now, right, are looking to build applications and platforms and systems that can adapt, that can respond, autonomously, right? And the future really belongs to, to those consulting companies and those software plus services companies that offer these platforms. And I think I'm very confident, right, that Infosys is the leader in this space, bar none, right, in being able to develop these AI and automation platforms and capabilities in building those digital capabilities, right? So that's the second piece of your question. And the third piece is around the spend, right? And I feel that from a Q4 perspective as well as from a calendar year 18 perspective, The spend prognosis does look good. It does look good. I think compared to the same time last year, clients are more optimistic about their own revenues and therefore their spend. Obviously, cost reduction continues to be a priority for our clients. But unlike previous years, what they're looking to do is to take the savings that they get from run the bank type activities, through automating those, through AI interventions there, and to use that pool of money into transformational programs. So the spend outlook is positive. The key trend is clearly AI and automation along with digital. And from our perspective, we are working very closely together, all of us, to make sure that we can sharpen our domain capabilities, sharpen our industry capabilities, make all of our use cases very relevant, to our client base rather than those being generic.